In our view, March was the makings of a bottom because the Mag 7 and the cryptos we thought were like 90% through to their winters or declines. They are outperforming, and I think that's a sign of leadership. But if we get higher global trade disruption, you still need AI and you still need the Mag 7. So I think they're actually good fundamental stories. This is all the hallmarks of creating some good opportunities. So I think investors do need to look beyond the headlines, maybe think 3 months, maybe even a month forward, and we just have to kind of wash through this bottom. But we already know where the leadership could be coming from. It's the Mag 7s and even the cryptos. I think investors just need to be kind of patient, cautious, and wary, have a bit of firepower, but I think opportunities are emerging.
According to Tom Lee, we are very close to establishing our crypto bottom during this bear market, and I tend to agree with Tom Lee. When you look at the 200-week, 100-week, and 50-week SMA moving averages and you compare them to previous cycles, we are basically just a few months away from finding the absolute bottom during this cycle. If you look at the 4-year Bitcoin cycle, we're also very close to establishing our bottom. And then when you also look at geopolitical factors like what's happening in Iran and some potential negative tailwinds that are coming from that direction, well, it also looks like we're going to be establishing a bottom based off of those events. And so what I am here to show you guys today is a legendary opportunity in my point of view, which Tom Lee really breaks down, talking about crypto and even stocks as well, technology stocks, which will be benefiting from this amazing situation, which will only be great for you guys if you take advantage of it. Now, before we get into what Tom Lee has to say, I do want to point out that my crypto newsletter will be giving you guys insights throughout this entire process completely for free. We release all of the hottest news, which I cannot cover on YouTube, inside of this newsletter to make sure that you guys have actionable insights delivered straight to your inbox that can ensure that you are ready for every single twist and churn that happens in the market. If you're not subscribed to this newsletter, you're missing out big time. So I'll leave a link down below so you can subscribe to the free newsletter and get these news updates straight to your inbox. Now let's get into what Tom Lee has to say here.
2026 will be a really important test because if Bitcoin makes a new all-time high, we know that that deleveraging event is behind us.
And your price target for Bitcoin this year is 250,000.
Yeah, so we think Bitcoin will make a new high this year. It's driven by, I think, the usefulness of crypto increasing. So we know banks, for instance, are recognizing blockchain, and the idea of settlement and finality work really well on blockchain. And then a company like Tether, which is a crypto-based bank, is proving that a bank that emerges natively on blockchain is actually better than a traditional bank. Ethereum is the second largest blockchain, and it's, I think, always going to be more volatile than Bitcoin until it becomes similar in size. The crypto world views Ethereum as a price ratio to Bitcoin. So there's this, if you just simply said ETH to BTC, assume Bitcoin is the price denomination of the crypto world. Ethereum's price ratio to Bitcoin is still below where it was in 2021, 4 years ago. And that, compared to 4 years ago, Ethereum is a far superior blockchain because we know tokenization, including dollars are tokenized, is one of the big bets Wall Street's making. I mean, Larry Fink says it's the biggest innovation since double ledger accounting.
And real quick, I just need to cut Tom Lee off here real quick because we got to look at what BlackRock is actually doing. I know Tom Lee is very bullish on Ethereum, but BlackRock is actually working directly with 3 different cryptocurrencies when it comes to real-world asset tokenization. Now, the first and the most prevalent example of where BlackRock is directly investing into is Ondo. And BlackRock's not doing this to the same degree on the Ethereum blockchain, or of course, they can't even do it on Bitcoin because they don't have the layer 2 development available there. But yeah, Ondo, XRP, HBAR. And so if you're really caring about what BlackRock and massive institutions are doing, pay attention to those cryptocurrencies because they are far more invested into those than they are Ethereum.
Vlad at Robinhood wants to tokenize everything, and we already see a lot of effort to tokenize not just dollars, which is stable coins, but credit funds. JP Morgan is launching on Ethereum a money market fund. BlackRock has already tokenized credit funds on Ethereum. So Ethereum is really the blockchain that Wall Street is beginning to use. If Ethereum's price ratio recovers to the 2021 highs and Bitcoin goes to 250, Ethereum would be around 12,000. And Ethereum is around 3,000 today. And then in terms of the future of finance, it's very obvious today that banks are saying blockchains are the future of finance. I mean, JP Morgan wants to build on the blockchain. Jamie Dimon said it's a better way to build a bank. And Ethereum is where all the banks today are actually choosing to build smart contracts. So it makes sense then, if there's financial education for the public, it should include Ethereum to an extent. For instance, Tether is expected to make almost $20 billion in 2026 earnings. That would make it a top 5 in terms of bank profits. They, on valuation, might be number 2 only to JP Morgan, twice the valuation of Goldman Sachs or Morgan Stanley. Tether only has 300 full-time employees. JP Morgan has 300,000. So by using blockchain, they make almost as much, they make more money than any bank, and they only have less than 1% of the M1 money supply and a tiny balance sheet.
Yeah, it's very true. And I just wanted to draw a parallel here to RLUSD, Ripple's stablecoin, which they're launching. So what Ripple is doing is they are launching themselves as a bank and building the foundation using this blockchain technology. And that is precisely why JP Morgan, Goldman Sachs, and these other major banks are scrambling to catch up right now, launching their own stablecoins and also building these new systems, because they want to make sure that they're not going to be left in the dust when Ripple comes out. But the fact of the matter is, Ripple has the foundation to do this, and the other major banks, they are years behind in terms of development. Sure, they might be launching their stablecoins, but they're doing this on another blockchain on Ethereum, which any single bank in the world can do, and they're hoping it's going to be good enough. But when you compare the transaction volume of what Ethereum is able to handle, and you compare that to XRP, or you compare that to Ondo, or you compare that to HBAR, it becomes abundantly clear very quickly, if you do any amount of research, that it is once again years and years behind in terms of actual functionality. And Ethereum, it may be good for decentralized applications and building certain financial products, but it's still not on the same level as those other names I just mentioned. And so that's something to keep in mind. Like, yes, they are launching on Ethereum, but that does not mean that that is going to be the premier technology of the future, much like how Bitcoin right now is the #1 cryptocurrency in the world, even despite the fact that it is far inferior to virtually every other top 10 cryptocurrency.
And yet it's one of the most profitable banks in the world. Because a lot of investors always only want to buy at the bottom and they want to sell at the top. But when we look at the stock market, and actually in crypto too, the only people who really make money are those who are investing for the long term. So as much as I'm warning about 2026 and the possibility of a lot of turbulence, they should view the pullback as a chance to buy, not the pullback as a chance to sell and to avoid stocks. I think it's a really important distinction, because too many people sell on emotion and then they don't make the second decision to buy back, and then they miss out on all the compounding investing delivers. I believe many listeners are skeptical of crypto and might even have zero exposure and say that they don't really understand it. One of the things that we have to appreciate is that crypto is being adopted by the younger generations. There is really a blurring between what's a service and what's money in the future. Every pullback has been a great opportunity. Last year, the tariff-related drawdown on April 7th turned out to be one of the best entry points in the last 5 years for anyone buying stocks. There were so many stocks that made new all-time highs, but really explosive rallies. I think that last year, investors, whenever they saw the tariff conversations escalate and become uncertain, the market really reacted poorly and fell sharply. I think that this year, markets are going to be a little more measured. There are still voices in the White House that are kind of saying, let's not undermine the Fed completely, because markets know, and market history knows, that the Fed is still the most important entity in the world. And to undermine the credibility and the independence would unleash a lot of uncertainty.
Right. Yeah. And this is once again a really important point to keep in mind here. When we look at 2026 so far, and we look at the Iran-Israel conflict and the U.S. conflict that's involved all in the Strait of Hormuz there, it's honestly been quite shocking. I mean, there has been massive escalations that last year would have caused cataclysmic events that would have completely destroyed the crypto market and caused billions and billions of dollars in liquidations. But this year, it's like a few $1 million liquidated off of these events. And so, yeah, that's still big price swings. That's still a lot of volatility. But Tom Lee is 100% right in saying that a lot of this volatility is starting to die down. And honestly, yeah, I think that we're extremely close to our bottom for XRP, HBAR, Bitcoin, pretty much every single cryptocurrency. They're going to bottom out around the same time. And when that does happen, that is going to be amazing. Much like that example with the tariffs that Tom Lee brought with the stocks, we're going to see the crypto markets bottom out, and then very quickly thereafter, we're going to start shooting up again. And that is going to be the perfect time to get involved in these markets. And so, listen, I know you guys do not want to miss that. You want to be updated throughout the entirety of all of the situation that's going to be happening out here. And so I want you guys to subscribe to my newsletter just to make sure that you're not going to miss anything. I upload daily on YouTube, but honestly, YouTube is not recommending my content like it used to. I am being suppressed in the algorithm actually, and I can't be suppressed on my newsletter. So if you want to make sure that you're not missing these updates when they do come, you want to make sure that you're catching or getting at least close enough to that bottom, the Crusaders newsletter, my newsletter I started, is the absolute best way to do that. So I'll leave a link down below for all of you wonderful people to subscribe to the newsletter for free so you can get those daily updates. And I'll see you guys in the next YouTube video. Thank you guys for watching. Hit the like button if you enjoyed the content, and I'll see you soon. Peace out.